Hey guys, how are you? How's everybody doing out there today? Today I want to talk to homeowners. Most people think that when you have a mortgage, that is your greatest asset. Well, it just depends how you look at it. Actually, you, the physical people, you, the breadwinner, you, the husband, the wife, the children, you are the most valuable assets. But in the case of money, it would be the spouses that are working, the husband and the wife, are the most valuable asset. The house can be replaced. It is not. It is actually both a liability and an asset, depending on who you're talking to and for what purpose. It is good that you own a home. Everybody would, most people would desire to own a home, which is a very good thing. It is a good investment in the fact that it's something that gains value, and it's not something that depreciates, which is a very good thing. So, but it is a liability because you have to pay for it, and if you don't pay for it, the bank will take it away from you. And so it just depends who you're talking to and what the purpose is for as to how it's looked upon. So if you want to pay for that beautiful home that you have, whether your mortgage is a 15 or 30-year mortgage, if you can get a 15-year mortgage, but if you get a 30-year mortgage because you want a lower payment, get the mortgage. You have to, either way, whether you get a 15 or 30-year mortgage, you don't want to pay for that mortgage 15 years or the 30 years, whatever the term is. Most people spend their time focused on the interest rate. Guys, interest rate only matters if you plan to go throughout the time of the term of the loan, for the most part. So in other words, somebody may have a 7% interest rate and somebody may have a 3% interest rate. Well, if the 7% person pays their mortgage off, then they don't have any interest anymore. And so the interest rate just determines that how much more money you pay for the loan over the length of time that you will pay for it. So if you pay for the mortgage 30 years, you'll probably pay for the house 2-3 times. If you pay for the house over 15 years, you're still going to pay for the house maybe 2.5 times. So the point is that every chance you get, if you want to pay your mortgage off, every time you make your mortgage payment, paying at least an extra $100 towards the principal. So if your mortgage is $1,000 a month, you'll pay $1,000 to the mortgage, and then you'll pay on additional, you'll pay $100 towards the premium. What does that do? That shaves about 7 or 8 years off your mortgage. And if you want to shave it down even more, if you want to cut it in half, when you get your income tax, you can just pay more. You can either pay $200 a month toward the premium, whatever you can afford. If you can afford to pay more, that's good. But $100 is good. $200 is good. And so, or you can make the decision that whenever you get income tax return, you can pay. You can take $1,200 from that income tax return and make a principal payment, not a regular mortgage payment, but a principal payment, and that will cut it down even more. So it's like you're making, some people call it a 13th payment, or you can call it just a principal payment, but whatever you choose to call it, you're making a payment on the principal. So whether you're doing the same thing with a car loan or whatever, if you take that additional amount and pay it towards the principal on the loan, which is the actual amount that you're paying on, otherwise you're just paying interest with the regular car note or the regular mortgage note. So when you're paying your mortgage, the first 15 years you're paying only interest. So if you want to pay that mortgage off, make that extra $100, $150, $200, whatever you can afford. But at the same time, while you're doing that, it doesn't do any good to just pay the mortgage off if you're not paying yourself. So you need to have an emergency fund, and you need to have an IRA, and you need to have a college plan for your kids, and you need to have a will, and you need to have life insurance. So if you don't have those things, then your financial house is not set up, and so you need to have those tax benefits that whereby you're saving money and you're also gaining money, because you're saving money on taxes and you're paying yourself. And that's the purpose of having a financial advisor or a financial coach. And that's the benefit of those things. It's not a rich person thing, it's an everybody thing. Rich people have it because they protect their money. The average person, middle income person, needs to have one so they can protect their money, protect their family, protect their assets, and also become wealthy. and while they're preparing for their future. So it's a good thing to seek wisdom and seek counsel, guys, and it changes everything in your life. So you go from being average to being in the place that you desire, which is to being debt free and financially independent. So hey guys, life is it's not hard. We just have to make the right choices, and we have to ask questions and then be ready for the answers, and then act on those answers when we get them. All right. All of this is part of being a good steward. God loves order, and there's only one order in the world, and that's God's order, and that is the true world order. I love you, but God loves you more. And guess what? God's excited about your future, so am I. Hey, we'll talk to you next time, guys. Be blessed.